some today. I've seen so many negative videos on the Chinese stock market today, and also other days that I just had to do a video on this. Also, I'm not giving you investment advice. You need to get with your financial advisor on anything that I'm mentioning. If you got any questions, you can call them up. Also, if you go in equities, you can lose all your money. You need to know that. Equities are not guaranteed. You can lose everything that you put in there. I'm just giving you my opinion on this. And I wanted to go over some stuff with you because I'm not seeing any of this stuff on the internet. But one of the things I wanted to talk about was how negative people are in China right now. Well, I'm not seeing anything on the internet. I can't pull up almost anything that's positive on the equities in China right now. Let me just tell you a rule of thumb that I've learned in the past. You'll never hear it on the news media, but when you go look at some of the best investors in the world, they do the opposite of what you see in the media. John Templeton, one of the best investors that ever lived, he always said that your best opportunity to buy is when the maximum pessimisticity occurs. That means almost no one is going into that market, okay? Remember, markets go up and down. Has nothing to do with valuation at all, okay? Now, valuations might determine how you want to pick your equities, but it does not move the market up or down. What moves it up or down is, do you have more buyers than sellers? If you got more buyers than sellers, it's going to go up. If you got more sellers than buyers, it's going to go down, okay? And during negativity time, that's when usually you're going to have more people getting out of that market, okay? And you finally get the point where it seems like it's so negative that, God, who in the world would want to go there? But that's the period of time John Templeton used to say, maximum pessimisticity. That's the maximum pessimisticity is at the very bottom of the market. Now, are we at the bottom of the market in China right now? I don't know. I would say we're pretty close to the bottom. I looked at a chart the other day to give you an example. It's gone up a little bit since then. It's around 16,000 on the Hang Seng Index, a little over 16,000 now. But the chart showed the Hang Seng Index is about where it was in 1997. Okay. Now it's going up and down and up. So they said it was as low as it was 5 years ago. They didn't mention on the news that it's also at the point it was in 1997, 27 years ago. Okay. Now, to give you an example of how bad that is, the Great Depression, when it hit the peak, it was right around, I'm just giving you some figures off the top of my head, about the peak around 1929 to 1954. If you had invested at the peak of the Great Depression in 1929, which was the worst time in American history, in modern American history, with the stock market, it would have taken 27 years for your money to come back to where it was roughly about 1954. That's about 27 years roughly, okay? No one was going in the market in at the bottom of the great, I said nobody, there were a few brave people jumping in at the bottom of the market. I think it was around 1932 when the Great Depression, the stock market bottomed out. It took almost right at 3 years before that bottom market, before it bottomed out. But that was maximum pessimisticity. This is what you're seeing right now in China. Okay, China is hitting, but you know, the funny thing is you can't just look at how bad it's been over the last 27 years. What you got to do is then look at, has China been making that much money? Yeah, they've been making loads of money. There are more millionaires per capita, or actually more millionaires coming out of China, more billionaires coming out of China than there are, I'm talking about self-made billionaires, than there are in the U.S. And one thing, I don't see that on the internet, and I don't see where they're talking about Chinese. They're the best savers in the world. They save about 40-50% of their money. Americans save in the very low single digits, okay? Used to be 3 or 4%. I haven't looked at it locally, but it was when I was growing up in the financial service business. It was awful, one of the worst in the world. So those two things alone, and Chinese are very hard working people. You take those two combinations and then look at the price earnings. Right now, I looked right before I came over here, it was around just under 24 times earnings, the S&P 500 index. The Hang Seng Index, where you have a lot of Chinese stocks listed along with Hong Kong stocks, it was about a third of that. Okay, so what's happened is the market hasn't gone up in China and Hong Kong, but what's happened is the companies have continued to make a lot of money. It's just brought the valuations down a lot lower. But because of the news media, if you sit here and look at the TV or you look at YouTube on the videos that come out, you won't see anybody talking about this. They don't ever talk like John Templeton does. Investing when you have maximum pessimisticity. Now, I'm not telling you to go in these markets like I've said before. Get with your financial advisor. You do your own research. I'm not telling you to go in those markets. I'm just telling you what I see and the experience I've had, okay, in this. And right now, those markets are extremely low. It's the lowest of any of the developed markets as far as valuations of any in the world except maybe Russia, but Russia, most investors can't go in there now because of the sanctions and invest. I think the last time I checked with Russian equities, I think it was around, the Russian index was around 2.5, 3 times earnings. That's incredibly cheap, okay? Yeah, I think it's funny. I'll give you some examples of what I'm talking about here, okay? Facebook went public around 2012. It's funny how people go and invest. Facebook, if I can remember correctly, was selling around 500 times earnings. This was back in 2012. It went public. It dropped within 6 months or something around $18, $19 a share. And then it went up, straight up from there. You had people just jumping all over that stock when it came out. Then, all of a sudden, the CEO leaves Facebook, and they said that she was the one that was really making that stock what it was. And I said, wait a minute, she didn't come out with this company. Zuckerberg came out with the company. And then all of a sudden, Facebook's tanking. Everybody is negative on Facebook in the last 12 months. Everybody's negative. Everything you see on TV is negative about it. And I'm thinking, Facebook's price earnings started dropping, got down to almost 10 times earnings. I've never seen Facebook drop that cheap. Nobody was buying it. I even saw one time, it's not even listed, but I saw on a chart, it got down to in the high 80s as far as the price. No one seemed to be buying that. Now it's gone up, it's gone from about the high 80s to around the low 90s, up to almost $500 a share now, and people are jumping in like crazy. This is the way the market works. People buy high and they sell low. And this is what you're seeing right now in Hong Kong. If you ask the average person, is it better to buy when it's low or high? They'll always tell you low. Try doing it. Almost no one is talking about the Hang Seng Index and how cheap those equities are. Now, probably it hasn't hit in the low. We might see another Evergrande that that might occur, which brings it down towards around 14,000, the Hang Seng Index. We don't know. And that's why I always tell someone, if you're going to be going in that market, you better be dollar costing to begin with, and you better expect that you're not going to hit the bottom, okay? It's going to take you time to get out of that. The key is where's China going to be in another 10 years? I mean, if I had to make a choice, I would tell you I think the Chinese index will do better than the S&P 500 index over the next 10 years if I had to make a choice. Now, you're going to see a lot of volatility in that. And again, you can go in that index. If you go and buy individual stocks, you can lose your ass. You can lose all your money in it. Okay? And you need to get good advice, not from me, from some financial advisor that you deal with. if you don't know that much about it, or go in some sort of index fund and dollar cost, that even then you better get some good advice before you do it. But I'm telling you that that market is, don't listen to me, listen to Charlie Munger before he died. He made it real clear. He said that, that's Warren Buffett's ex-partner, who has recently been deceased. He said right now, by far, China, the big companies in China are selling at a lot better valuations than U.S. equities, okay? And valuations has a lot to do, just like with real estate. It's funny how people go out and they buy these, they buy equities at 500 times earnings. I remember when Amazon was 300 times earnings, people were buying it like hotcakes. You would never see people buy real estate. How many times have you bought a property that was selling at 300 times earnings if you rented that property? You'll never see it. They do it in stocks though. I think you ought to compare. They shouldn't be any different, okay? I wouldn't be looking at equity unless it's 15 times earnings or under. I don't care what sort of track record it's got. And don't listen to me, John Templeton, one of the best investors that's ever lived, he said one of the things that he looks for first is, this is just one of them, pull up John Templeton's 16 Principles of Investing. You can pick up a lot of good information from that. You don't have to be a rocket scientist in this, okay? But one of the things he does is he looks at only equities that are 15 times earnings or under, okay? That's just one of the things he looks at. In other words, if it's over 15 times earnings, he just skips it, doesn't look at it. Now, Buffett's a little bit different. He used to be that way. Buffett used to buy the cigar butts that were real cheap, and he says he doesn't do it anymore. But the funny thing about Buffett, if you look at his track record, he did a lot better rate of return wise when he bought the cigarette butts than what he's doing today. He's still doing good, but man, he was killing the stock market in the 1950s all the way up to the 1980s. I mean, he left it in the dust. Now he's last 10 years, I think he's underperformed the S&P 500 index. Now he's still doing really good, but the point I'm trying to make is he can't buy the cigar butts today because he's got so much money to invest. And these small companies, he's incapable of buying them, those companies, because they would go up so quick if he went out and bought them. And it would disseminate a lot of the rate of return that you can get just from him going in and putting several $1 billion in that stock. So it'd be very difficult for him to do that. It's a lot easier for you to do it. But the point I'm trying to make is, I think if you're looking for value today and you're looking for major markets, I don't know if any place is more undervalued than China and Hong Kong. And I did a comparison. I think I ran it from when the Hang Seng Index came out. I think it was 1969 or 68 right there. And ran it all the way through to, I think it was 2018. That's a long period. The Hang Seng Index killed the S&P 500 index. So right now, what is it going to do? I can't tell you. I can't tell you where the bottom is going to hit. Maybe we've already hit the bottom and it's on its way back up. But I can tell you this. The valuations are incredibly low there, and as far as major markets, I don't know of any place where it's as cheap to buy major big equities in the world. And I remember Charlie Munger started buying a lot of Alibaba, and he skipped the one principle I just mentioned that Templeton used to do. And if he had started and waited until Alibaba was under 15 times earnings like John Templeton, he wouldn't be buying it so high. He bought it when the valuations was probably right around the mid-20s, and that's why I think when you look at equities around 15 times earnings or under, you've taken a lot of the negativity out. It's kind of like buying a used car. You buy a car that's 8 years old, 10 years old, most of the depreciation is out of it. That's how I buy cars. I buy used cars. Almost every used car I get is 8 to 10 years old, and almost in every case I can sell it 5 to 7 years later for about what I paid for it, or even make money on it. You're never going to do that with a new car. Okay, that's just another lesson that I can tell you is if you're buying Lamborghinis and Mercedes, man, especially if you're doing it and financing it, you're dumb, double dumb, okay? Because not only you're going to lose a bunch as soon as you take it off the lot, but you're losing a fortune in interest payments financing that car. And don't ever buy a new car. Always buy a used one, 8 to 10 years old, man. You'll save a ton of money. Get one with low mileage, and you'll do real well. If you want to know more on this, and you want to legally get your income taxes to zero, how to get a second passport, as quick as 4 to 8 months, do 3 things. Hit the subscribe button on the right of your screen. You'll get new videos automatically as they come out. Number 2 is I would like to hear from you. If you got a question or comment, put it below. And go to our website, www.citizenshipquickly.com, and just ask for some help. And I look forward to talking to you in the next video. Take care.